Is everybody okay with being recorded?
Oh,
Okay, good. Okay. My name's Toni Bullard. I work for Preffered right in Walnut Creek. And Gina Marie had reached out and said, you know, they had a few agents that have inquired on mobile homes, which, you know, believe it or not, in today's market is actually an option. And we do offer them at our company. So I put together a little training for you guys. This is Ashley Bullard. She is on the team as well. And she's also my daughter-in-law, married to my son, with two beautiful grandchildren. Yeah. And then we also just joined our team is Katie Bullard, which, you know, is my daughter. So we're just going to keep the Bullard women going. You know, we're going to grow this team and make it amazing. But this is a little niche that we do offer. I know a lot of lenders don't offer it. And let's just go around real quick so we can get your names, and then we'll jump right in. Well, you're chewing. Suzanne.
Right.
I know.
Yeah.
Mia. What was the first name? Aaron. And Jill. Okay. So nice to meet you guys. We'll go ahead and we're going to do this. Well, let's just do this, and then we'll hand these out later, so you don't have to take notes. You'll get a copy of the like, thank you. I got it. Of the PowerPoint. So, you know, we're going to talk about mobile homes that are on rented land. So, you know, the other side of it is the manufactured home, mobile homes that are on land that you also purchase and you own. And honestly, those are very similar to buying a single family home. The requirements for those are a little bit different, but not much. They go through Fannie Mae, Freddie Mac, VA, FHA. So we're not going to really talk about that part. We're going to talk about the option of being able to buy a mobile home in a mobile park, which really hasn't been an option for a long time. But given the way the market is, it's actually become an option for people. So that's what we're going to go over today. Okay, so our little table of contents, we're going to cover the highlights, the financing on mobile homes before 1977 and after 1977, as well as buying a mobile home as a second home and how the taxes work on those, because they're a little bit different than real property. Mobile home park rules, and I have a couple of scenarios for you guys, and then we'll go over some questions if you have any questions. But feel free to ask questions in between. I'm okay with that. Okay, so let's go over the highlights. So the highlights are you can put as low as 5% down. For a second home, you do have to put 20% down, but there's no hit on rate or fees. So the fees are the same for a primary home as for a second home. No mortgage insurance. Seller can pay the closing cost. Gifted funds are allowed for both down payment and closing costs. All borrowers must live in the property. Payments must be impounded, and the debt ratio is based on the principal, interest, taxes, insurance, as well as the rental space. Because anytime you buy a mobile home that's in a mobile park, you have to pay a rental space, similar to like an HOA, but you're just renting the space where the mobile homes are. No land purchase required. Parks are welcome. Minimum FICO is 600. We can finance both new mobile homes as well as pre-HUD mobile homes. So when I say new, if you were to do a manufactured home or a mobile home on the land that you're purchasing, it has to be on there for at least 12 months. Otherwise you can't do it. So in this case, that requirement is not required, which is nice. Financing on single, double, and triple wide mobile homes. Okay, let's get into a little bit of the details on it. So this is the financing for mobile homes that are 1977 or newer. Now, why 1977, right? Like, okay, were we even born? Oh, wait, I was born. Joel, were you born?
No.
Yeah, we got it.
Is it a lead paint thing?
No, well, what it is what it is that HUD was actually founded in July of 1976. So HUD has all their own regulations and everything. So before HUD, it was kind of just free for all, you buy, people go out and take the land, But after HUD was created, then different requirements came into place. So HUD was developed to protect, buyers, people that own property, so that, everything was more on a fair playing field. So that's why it's before 77 and after. So minimum down payment is 5% with a 600 plus FICO score. Now we only look at Equifax. So in a regular purchase, we would take the medium score, right? Throughout the high, throughout the low, and we'd use the medium. And that's how we do it on a home purchase. In this particular case, we only use Equifax. So whatever Equifax is, that's what we use. So you can put down, so the rate is determined based on your loan to value, your credit score, your debt to income, and the year of the mobile home. So the newer the mobile home, the better rate you're going to get. The lower your debt to income, the better rate you're going to get. The more money you put down, the better rate you're going to get. So, but honestly, it's not that much of a difference. So from 5% to 20%, there's about a 0.5% difference. So it's not that much. Yeah. You know what I mean? So, it's not like, oh, you put 20% down, you're going to get a point off. It's pretty much like a 0.5%. So, and then another thing about the down payment and the rate, the credit score, is we will go as low as 550 on a credit score, but they have to put 10% down. But there's a little catch to it, is that you also cannot have any collections. Well, you can have collections, but they have to be paid off, right? You can't have any past dues. Someone that has a 550 credit score will probably have those obstacles. So it's kind of like the catch-22, but you never know. It could be that they just have bad credit and they've never rebuilt it and everything's been paid off. And believe it or not, some people don't know that they have to actually rebuild their credit. So that could play into part, but chances are we'll probably have problems. Maximum loan amount is 25 years. Okay, not 30, like a regular home. There's no origination fees and you cannot buy down the rate. So the rate is what it is based on the requirements. Okay, so this is kind of interesting. You must have at least one comp in the last year to get financing.
Ooh, no.
It is kind of hard right now, but I think that will start to change because this has become an option. It really has become an option for you. So it is kind of interesting. And, I'm going to do a little bit more digging on that to find out, okay, because I asked the question, well, what if we don't have a comp? And, well, we can't finance it. And I'm like, well, that's crazy. So I'm going to find out if there's other options. When I did the training, I didn't want to use up the time, but I was going to do some research on that. But that is a requirement. You have to have at least one comp that's within a year.
How far of a location span?
Well, it says it has to be in the same area and a similar model. I don't have.
Meaning that park?
No, I think you can go outside the park. I think you can go out the park. I don't know the exact amount, but I'll find out and email you guys a little bit more information on the appraisal part, because it is kind of interesting, because I was like, wow, but then honestly, this is so new to all of us, kind of. I don't know how many mobile homes are sold.
That's a lot for Walnut Acres and one on the other side. I just sold one last week.
Okay, good. So that's good. So we have a comp, right?
There's a lot.
So
Thank you.
I did one, and I recently just did one in Vacaville. And there are beautiful mobile homes in Vacaville. I was just dumbfounded. Like, beautiful.
Wow.
Yeah.
Is it true, Tony, that the interest rates are higher on this type of financing versus the standard conventional FHA? And I know it's in general.
Just, yeah, but just a tiny bit though, because the one that I did, we were quoted at 8.2 at 5% down. No, I'm sorry, 8.7 So it is a little higher. 8.7 at 5% down and 8.2 at 20% down.
Okay, 'cause I was
But the
talking
rates
about-
are in the high seven. I mean, like, there's not that big of a difference.
No, because I was
Like, it's
talking
not
to
like
an
2 or
agent
3.
for one in Concord, and then the one out off North Street. If you go out, there's that one out there, and they were saying that the agent was trying to say that the financing was in the 10% to 15% range. And I'm going.
Well, it may be with a company that he uses,
Yeah.
but it's not with the company that I use.
Why can't you buy down the rate?
Because, well, it's a little complicated in the sense that it's not real property. It's actually a vessel. So everything goes through DMV, believe it or not. And it's just, and we'll get to that part in a little bit, but it's just a requirement that they don't allow. They just don't allow it. I think because if they default on it, I mean, they are higher risk. Unfortunately, they are higher risk. The money that you buy down kind of has to be paid back by the lender. So I think because of that, they don't allow it.
Are they able to refi later?
Yeah. You can refi up to 95%. You can refi cash out even at 65%. I mean, like you can do all the other things, so the good news is we can refi once the rates drop. We can definitely refinance on them. So they have a lot of the similarities of a single family home, but then they don't because it's not considered real property. But they do actually. It's kind of cool. No non-owner occupied cosigners. So anyone that's on the loan has to live in the property. Okay, let's move on.
Are you
Oh,
gonna
yeah.
go over the fact that the mobile home park is a separate application, that you have to qualify for that?
Yes,
Okay.
yes. I will talk about the mobile home rules and all of that. But chances are, well, we'll get to that. We will talk about that. Okay, so by any chance that you get a mobile home that it was built between 1970 and 1976, which is it's a really small window. Anything before 1970, we won't do. Requirements are way different. I'm assuming the requirements are put in place to defer you from doing them. But minimum down payment, you have to put 25% down. You have to have a 720 credit score. We only look at Equifax, but they charge $3 to even do the loan. Yeah. And you can't buy down the rate. So, I mean, the truth is there's not a lot of these out there.
Yeah.
And it's a long time ago.
Yeah.
We won't say how many years, but it's a long time ago. Okay, so, yeah. Okay. Okay.
Oh,
I love that.
great grandmother.
Okay, so buying a mobile home as a second home, which, believe it or not, a lot of people do it, like up in Tahoe or down in the beach area, Pismo Beach, or, it's kind of a nice little place to have where you don't have to buy a second home. So that is an option. You do have to put 20% down. You do have to have a 600 credit score or higher, and it has to be at least 50 miles from your primary residence. Now, there are a few exceptions. If the mobile home is in a vacation scenery area like Lake Tahoe, Pismo Beach, I think even Santa Cruz. So like if you live in San Jose and you want to buy one in Santa Cruz, that's only 40 miles away. We can still make it work. It just has to be proven that it is a vacation spot.
And who judges that?
The underwriter, just like, because they're underwritten just like any other loan. But you write a letter, you write a letter of explanation and you explain that, we go to Santa Cruz all the time. This is what we do. It's 42 miles from our house and it's truly going to be used as a vacation home. But I mean, the odds are it will probably be 50 miles further. Now, if you were to, let's say you own a condo and you want to buy a mobile home, which I don't know if that would, it's hard to say, but the rule is you cannot use departing income from where you're leaving if you're going to rent it out towards income of buying a mobile home. But the shocking thing to me is on that rule is who's going to go from a house to a mobile home unless maybe you're retired or
Right.
you're elderly, because the truth is you don't have to handle the maintenance on the grounds. you don't have, I mean, it is low maintenance, you know? So in that case, it could be, but chances are they're probably going to sell their house and buy you know what I mean? But either way, you can't use the parting income for rental if you're leaving to go to a mobile home, which I think is so funny because I can't picture anyone doing that, but you never know. Okay, so personal property taxes. So this is how it works. If you don't own the land that your mobile home is on, it is considered a vessel because it's movable and it goes through the DMV, the State Department of Motor Vehicles. The taxes can be, the maximum tax can be 1% of the assessed value, but a lot of times it's less. So taxes are going to be way less than on and you pay it yearly, almost like a registration, like you do on your car. You know, it's a yearly fee, but you do have to have it impounded on your payment. So not having impounds is not an option. You have to have your taxes and your insurance impounded with your payment. Your rental space you pay separately, like you would your HOA. That's paid separately. Any questions on this part? Okay, let's move it along. Okay, so these are the mobile park rules. I mean, these are just something you guys really have to be aware of when you're looking for your buyer. You know, is there an age limit? Can you have kids? What's the maximum number of people that live there? Can you have pets? And is there a limit on how many pets you can have? What? Yeah, exactly. Number of cars you can own, you know, can you run a business out of your mobile home? Can you rent the mobile home? So let's say, you know, this is a transition period for you. You decide you now are ready to buy a house. Can you rent it? Some mobile home so like Don said, you have to go through the approval process with them, and it's usually a credit check. It's usually, you know, just like if you were renting an apartment almost. You do have to go through that credit check with them, but you also have to be aware of the rules, because every park has different rules. And we just want to make sure that, you know, if the buyer says, yeah, we plan on living here for 2 or 3 years, then we're going to rent it out and buy a house, then you have to make sure that the mobile park allows renters, you know, otherwise you move on to a different park, because they're all different, you know, they're all different.
Well, one of the things I ran into was a couple of things. One, they needed to have at least a 700 credit score, you know, with the park. Yeah. And the other thing is they take whatever the space rent is into account when they're getting their loan, so that didn't income.
No, they do. Yeah,
you
do.
They didn't qualify.
Yeah.
So they were like 3 times. Yeah, and you have to make 3 times the rent space, and then you have to whatever that rent space. Like this one was like $1,300 something.
Yes. Yeah, they run usually between 8. I mean, if you can find one for 800, but like you said, up to 1,500, and even in vacation areas, they're like $2,500 for the rent space. Yeah,
that's really high. And I thought I found some that were like 1,600, and I was like,
well,
that's high.
On the if you go anywhere on the coast, they're gonna be high. I know, but it's cheaper than buying a house on the beach. You know, it's hard to say. It's really hard to say. But your normal rent space is going to be around $1,000 probably to $1,200 is what your normal. And I did a couple of scenarios for you guys. Okay, so let's look at. I did some scenarios. These are actual mobile homes that are on the market right now. So this one's in Clayton. Purchase price is $215,000. It's a 3-bedroom, 2-bath, 1,040 square feet. The lease amount is $1,000. So I just used $850 as the rate. So I am 5% down, 25-year, and I did the 25-year term. So with the rent space, $2,953.01. I mean, I don't know what a 2-bedroom apartment goes for these days, but about that, right?
3.
Yeah. And this is a 3-bedroom, 2-bath, and so, you know, it's one of those things where you're like, wow, this could be an option for people. Like, really. So then I went to 249, which is in Benicia, which Benicia is beautiful, right? Who wouldn't want to live in Benicia? Yeah. You know, in the end, their total payment and their lease space was only $995, which was surprising to me. $3,207. So And then I did 289, which this one's in Pittsburgh, and it's got a little bit, and in the end, they're paying 36.51. You know, we come across a lot of people that just because of the way the rates are in the market is, they're not qualifying for what they normally could if the rate was 4%, right? I mean, I wish that we could snap our fingers and the rate could be 4.5% forever, because then so many people could qualify, and it's a normal rate. You know, anyone that got 3.25 is not a normal rate, and you probably won't ever see it again. You may, or you may not. And it's great. Yeah, I know. No, they were. That's what I'm saying. And all those people that bought houses at 3%, some of them feel like they're being held hostage because they can't sell their house and buy a house at 7%. Like, they're stuck. And that's why our inventory is so low, because they're stuck. Like, who's gonna sell a house at 3% and buy one at 7%? Nobody, unless they have to. Oh, wait a minute, someone did. But you know what I'm saying? But
I didn't have 7% though.
yeah, well, yeah,
Rob got me 6.1.
yeah. That was a while ago, though. The rates have changed. Yeah, oh yeah, the rates have changed
Changed a lot.
a lot. Yeah. So it is an option. I mean, even if you look at condos, you know, condos with their HOAs, you know, a lot of people aren't. So, you know, to me, like, this is an option for someone who qualifies for like 400,000, right? Or 450. You're not finding a house. You might be able to find a condo, but your payments are going to be higher. Plus you have the HOA. So it's kind of like one of those things where it's just an option. You know, it's a really good option, I think.
So the rental space fee comes into the debt to income.
Yes.
ratio.
Yes.
I don't know how anyone that is 55 and older could qualify for a finance and the refinance the rental space.
Because they're
On a
retirement.
fixed income.
If they're not making.
So hold on, you're saying the park requires the debt to income to be,
Yes, you have to make 3 times the rental space. You just went through this and it's
Oh.
$1,000 a month. No, she doesn't have a finance.
so she has to make $3,000 a month,
Even though she paid outright cash for the mobile home.
and she doesn't make $3,000 a month?
She was like $10 short. And that's
No
what
way.
she did.
Yeah.
We were just talking about it yesterday in the office. Misty was, and she was trying to show one.
Are they all like that, do you
Yeah,
think?
they're all 3 times the
And I've seen that.
For the approval of the park?
So it's hard when you have like age restrictions on the parks, because
Yeah.
sometimes, a lot of times these retired clients have that.
Well, the one I did was a very young couple, and they were like 25 in Vacaville, and they were living with the parents, and they have a couple kids, and it was a perfect setup for them. And you know that, like, in so many years they're gonna make more money. They're going to, you know, they are, you know, progressing in their careers, and you know, so you know, it was a perfect it's a perfect setup for them. It was a perfect startup. Okay, let's just go over the pros and cons real quick. Okay, so cheaper than a traditional home, low maintenance because you don't have to take care of the park. You know, they do all that. Some of them have swimming pools. Some of them have bingo every Friday night. Or, you know, and like they actually have stuff. You can live in a high cost living area, you know, which, you know, if you're a commuter, it might be worth it buying it in Clayton than having to go to Vacaville, right? Like, that's, your commute is just so much less. Perfect transition home, which, you know, we kind of talked about that. Lower taxes, and they can be high end. I mean, there's some beautiful mobile homes out there. I was a little surprised. No, they're all upgraded with the granite. I mean, they're just beautiful. They're not like the mobile homes that we remember, like in I'm not going to say in the 70s, but even in the 80s or the 90s, you know, like they have become an option. So the cons, there's different type of financing. So the financing is a little bit more stricter because, you know, the collateral isn't as, solid as a regular home. You have to rent the land. There is a stigma to it, but hopefully it's going away. You know what I mean? Like, you know, you don't have to be like, I'm the girl that lives in the trailer park. You know?
A negative
It does have like a yeah, yeah, unit number, yeah. Yeah, that's awesome. Limited, you know, the designs are limited layouts. They do depreciate in value. I mean, you're not gonna build equity like you are in a condo, or, you know, my thing is, like, if we can get them into a condo, that's probably better than a trailer, a mobile home, but who knows? It just could be, like, if they have 3 kids, a mobile home might be better, you know? Especially if it's a park that has a pool and everything else in it. And they can be a little hard to sell. Yeah. They can sit for longer, yeah. Yeah, because they don't. So, I mean, buying a mobile home isn't going to be something you're going to buy and say in 3 to 5 years I'm going to sell it and buy a house, because you're not going to get the equity. You're better off doing a condo. And even condos are harder to sell than homes, you know. So if you can at all get in a small, you know, single family home, that would always be your first option, because it's going to build the equity. I mean, when I moved out in Brentwood years ago, this was the place for first-time home buyers, right? It's not anymore. Manteca, Modesto, not even Tracy. Yeah, Lathrop, you know, so it just keeps going further and further out. You know, when I moved to Oakley, I mean, I grew up in San Francisco. Me and my ex-husband, we both grew up in San Francisco. When we told them where we were moving, you thought we were moving to another state. Yeah, they were like, what? Where? What? Yeah, and it's only an hour. But now it just keeps going out. And so, you know, it's shocking that Tracy used to be so inexpensive, and now it's not, right? Now it's not. So, you know, it is definitely a good option.
Melissa, I'm curious, why was it a good fit for your client? That was your mother-in-law?
We just got her into it last week. But I've had a lot of clients that call them to Zillow that just can't qualify.
So why was it a good fit for her?
For her, she was able to pay out cash is the only reason we were able to make it work. If she had to finance it, it would have not worked.
But why did she want to be in a mobile home?
She did not.
I get that option. Tina Murray.
I'm just curious.
No, she didn't want to. She needed to sell her home in Rio Vista. One, we needed to get her closer.
Okay.
Yeah.
There it is.
So there was
Yeah.
location,
You
closer
can
to
care
grandchildren, and then she needed to pay off debt. So the only way she could do it is
To sell our house. Well, we considered putting my mom one in years ago. She couldn't live by herself now, but years ago, we looked at that one in Oakley, right on Main Street. I mean, it was really nice. Like, and we were gonna pay cash for the mobile home and everything, and then I don't know, we just didn't do it. And I'm glad we didn't do it, because she now lives with me because she needs help. But I think it is a good option for.
I talked my mother-in-law out of it like 4 or 5 times because she kept thinking, well, we've been in the house. It's got this big yard. She lives in Somerset one.
Oh, okay.
This big yard, and this, 12 square foot house. It feels more like 14. It just feels
Right.
a little bigger. And she kept like listening to people who were like, you got to get out from under this house or this yard and all this maintenance, all this stuff. Go buy a mobile home. And I'm like, no, you're not going to buy a mobile home. Because now you're paying more than you paid for your house to buy the mobile home.
No, it's true.
And then the rent space is going to put your payment more than what your house is at.
Use that money and hire somebody to take care of it.
Yeah. Yeah.
All that. So we had to like
We
talk
can
her
pass
off the
these out.
ledge.
So, it has become an option if it's your only option, right? But it is an option because I still believe that it's better than renting. I still believe it's better than renting. So, it could be a really good option. Do you guys have any questions? No, we kind of went through it all together.
Question, but I don't know if this is particular to this.
Well, it could be about anything.
There's a family member that I have. They have to move their mobile home every 6 months. Is that like customary for everybody? Or?
Oh no! So they must be on like a timeshare thing or a.
I don't know, because they've been living in the property for.
Is it a campsite?
Private property?
It's
Is it
in
community?
Bay Point, like right off. Step Street.
It's okay.
I forget.
Good point.
But they just started. They went into new ownership, and then the new owner said that they have to move it like every 6 months.
Like move it where? Somewhere else?
Just move it for 24 hours and then bring it back.
Yeah, so that's
Oh,
probably,
okay.
it's considered more like a campsite that people live there permanently. We have a timeshare in Napa called the R Ranch. And I don't know if you guys have heard of it, but it's the same thing. We can keep the trailer on there for so long, and then we have to take it off for 24 hours, and we can bring it back. That's
Or just move it.
yeah, but it's not a mobile home. It's a trailer
Yeah.
that you hook up to the truck. You know what I mean? So it's different.
Yeah, but
Yeah.
she has been living there for so long, and they never asked her to do that. Just until
It's so crazy.
New management.
Yeah.
Oh, yeah.
Maybe they want to stop people from living there permanently. Maybe that's their goal. I don't know. But we have to do the same thing in Napa. But we don't live there.
So, just because we have a mixture of very experienced and new agents, the contract is special, and the disclosures are special for mobile homes.
Yeah. It's different. Oh, for you guys writing your contract, that wouldn't be a lender question. So I'm not sure.
It is. Oh, I'm saying, yeah. It is. And then
Oh, you're
maybe
saying it is.
have to title is different, like correct. Just like
Yeah,
you can only
title
get
is different.
Loans for certain people, you can only use certain title companies. So I learned that.
Yeah.
I was like, I put the
different-
it's yeah, contract, and there's different disclosures from modular and mobile homes
Gotcha.
versus.
So you know that. Yeah.
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 What, title company did you use?
Yeah.
I used, Fidelity.
So that was.
I will get a list
Sorry.
of title companies that do them and send it to you guys. I will get a list, and then I'll also find out more about the appraisal. How did? Okay, she was cash, right?
What if
Right.
you can't find a comp?
I it's my understanding we can't do the financing. That's my understanding, but I'm gonna do a little bit more research on it. I think I have. Did all of you guys sign up for the e-invite? Then I have your emails, so I'll send out an email once I do that research on the title companies and the appraisal process. I'll get more information on that.
I mean, even when it comes to the notary, the title companies like, well, are they familiar with manufactured homes in this scenario? And I'm going, oh. So I called my notary that I,
Yes.
requested, and she's like, no, I've never done one, but I'll figure it out if there's something that's abnormally that comes up. It was one of the easiest signings we've ever
Yeah.
done because it was.
Because it's more like yeah, but it's also not real property, so it is a little bit different.
Are you? Maybe I missed it. Insurance, like no homeowners insurance.
No, you have
You
you do have to have hazard insurance, homeowners insurance, but there's no mortgage insurance. So even though they're only putting 5% down, there's no mortgage insurance
Is it
like you normally would have.
For them to obtain in today's day and age?
I don't think so. I don't think so. I think it's pretty standard, but I can check with my agent and ask her.
Areas and things like that.
Well, I'm sure it's normal in any of the fire areas and all of that. But the lady in Vacaville, she got insurance, no problem. And they had all those fires, 2 years ago, and Vallejo and Vacaville. There are a lot of insurance companies aren't writing policies in California, but I know Farmers does. So that's normally who I go with, but I know there's a few other ones too, because she's also a broker. So, so I've never had problem. I've never not gotten insurance. I mean, we did one where they bought up past Coppola up there, and I'm telling you what, it was, we almost didn't get to do the deal because we couldn't get insurance, and it was probably like 4 years ago where the fires were just ridiculous. But we ended up finding someone that would give them a policy, but it was tough. It was tough. Yeah. Well, thank you so much, you guys, for letting me come in and
Toni.
share with you.